USD yen, USD CAD, US 30 down, NAS 100 all achieved their designated targets, with the NZD CAD and the pound against the Australian dollar both getting taken out. Good afternoon, ladies and gentlemen, and welcome to this afternoon's Market Recon session. Hope you're all doing well, team. Good to see you all. After what was a very big day yesterday for personally my first day back fully trading the markets, it was a great start. It was a really great start. We had a nice series of trades, nice pool of positions for the fund, good diversification going on, and we did indeed manage to get a decent return as well, which is the most important part, right? We actually had USD yen, USD CAD, US 30 down, NAS 100 all achieved their designated targets, with the NZD CAD and the pound against the Australian dollar both getting taken out overnight, I believe. I don't know the GA was. I can't remember the NZD CAD. We also had a couple of real close calls as well. The Euro Oz here. I'm just doing a quick recap session. By the way, everyone, this is for yesterday's members who are in the everyday live events and sort of direct access to the fund and what's going on there. But Euro against the Oz, we were waiting for the price to come up into liquidity before selling off. This one missed that liquidity point by a hair's breadth before going right the way down to target profit. So that was a bit of a shame. And we actually had the exact same situation happen with natural gas. Natural gas was on the rally front. We had a long bias. We were looking for the market to come down into here, which is our big daily broad liquidity level here, the commercial area where we've seen evidence of the markets being bought back every single time. Market missed it. We missed it by a hair's breadth again. We came down. We actually hit the break of structure point, which was then the designated area where the market just rallied right the way back to the target profit and beyond. It's currently trading at 3025. We have behind the scenes been waiting for natural gas to rally back, and I've been talking about this over the last couple of weeks. Last couple of weeks, me being in the office, of course, and it does appear to be playing out as anticipated. So that's good, but it's also a bit unfortunate because we're not in the damn thing, which is a shame. It is a shame. Good afternoon to you, Braden. Good to see you, buddy. And good afternoon to you, Scotty D, as well. Good to see you, mate. So there's that going on at this time. Now, in terms of everything else that we were looking at, there's no real notable call-outs apart from the Australian dollar versus the CAD. We were looking to trade this one again yesterday, but unfortunately the market was trading too low and too far into our trading margins to be able to pull it off. And we wake up this morning, the damn thing's trading back up at the top level of liquidity, which means we can now place this back in. Now, I've been watching this one quite closely. There wasn't any need to fire out the trading opportunity beforehand. And at this time, we're currently trading at 90.19, which is a break close on a retest above the breaker structure point. I mean, honestly, team, looking at this at the moment, I'm thinking we could get in really aggressive on this one. If I drag that designated area for entry there, let's label this one as a green for entry. We can bring the entry right the way up. Let's say have that little bit of a margin below the access point. So that's going to be 8,995. Target profit, of course, can be dragged back down to that 88.96 point, which means then our stop loss, let me just go to the 15 and unstretch this a bit. So that means that our stop loss at the moment, this is yielding a 1 to 3.28, but the stop can now be there at a 93.37 point above the big liquidity and above all of the highs that we've had in this point, and still get that beautiful risk reward that we're looking for. So it's looking really, really good, I must say. It's not, this break of structure point, make no mistake, it is not the best one. The best one is the one that I had in there in the first place, but the stop loss to get that, generate that 1 to 3 is going to be lower. And it would be nice to be able to have the stop above this point of liquidity up here and above all of those recent highs, so that we can get that in. Now, what I will say, because I appreciate there's people in here that are watching this session, they are not everyday members, you know, you're not in the live events every day, so you don't have me managing the trades with you. If you take this will be a longish term position, comparatively, in comparison to what we usually would do. So usually the trades that are generated by the fund, you know, we usually take them. They're usually active for maybe 3 to 6 hours. Sometimes we get overnighters at a push. This Aussie CAD, we have done back-to-back profitable trades, 1 to 2.8, a 1 to 3. We've done very, very well in it, and every one of them has been about 7 to 8 days. So the chances are that if we take this, you will be managing it on your own. There's not too much of a management process, though. I just want you to be aware that if you do decide to take the trade, you are likely going to be on your own with it, you know, for a little while. So it's fine, though. If you're risking 0.25%, which is our designated risk target for every single position, no more, no less, then you're going to be absolutely fine. You know, if you start over risking things, you start putting 1 to 2% on it, and it goes against you, and you get pissed off. And you know, the bottom line is, guys, it's, you know, that you've kind of made your own bed. You've got to sleep in it. But 0.25% is going to protect you. So please adhere to the risk rules. They are there for a reason. But that is going in. Okay, so officially pending order, short the Aussie CAD. These are the exact details. I will take a picture of this one now and send that out to you all after the session is done this afternoon. But I'm also going to add that into the book here. So yeah, that's going to be AC. And this is based on a pending order via a break of structure, 0.25% of my account being risked. And it's a short. So that's it. And this is going to be the third run. It's going to be great. It's going to be great. I'm positive, feeling pretty good about it. We've had a couple of really good runs in it so far. Let's see if we can get another one. Let's see if we can knock out a triple. So what next? As I said, these trades are already kind of completed here, most of them. The NZD USD is not. That was just looking for a little bit of a catch a falling knife scenario down here between the 58.35 and the 58.206 point of liquidity at the lows. Market did reject this area, came right the way back up. That's great, of course. We're left clear, unexposed to it. It did come down again as well about 9 o'clock this morning, but it's rejected it yet again. So for now, I want to remove that. And for those of you joining us here for the first time, of course, don't take it. It's not a trade that you will want to be taking anymore. So let's remove the NZD USD from the book. And that means I'm going to make that orange. Yeah, that's fine. Yeah, that's fine. Right on. So let's have another look at these now, because we can hit these with a fresh perspective, can't we? So yesterday's USD JPY was really nice. Doesn't look so good today. We're still consolidating inside liquidity at the moment, which means orders are being filled, which is great, but it's not great for us today. We need to see the break close retest above or the break of structure below, and then we can get excited. But right now it's order building. USD CAD. So let's just have a look at this. No, that's exactly the same situation as the USD yen. Nothing to be said about that one at the moment. NZD JPY. It's got a very, very gradual uptrend at the moment here. Daily time frame has failed the retest. So we were looking to retest this area. I need to change that back. There we go. So yeah, we were looking to get the retest of that 86.64 point. It has failed the retest. The market's coming up here now. We've actually got what appears to be a fresh break of structure on that daily time frame, doesn't it? So we poked our head above the water yesterday. Today we've confirmed that move, and we're now appearing to be very buoyant. So we could indeed be looking at the move back up to 87.68 on that one. Let's have a look at that again on the 15. So 87.68. Okay, yeah, so that's what I'd be aiming for. So we've been able to ascertain our points of liquidity and our trading margins as a result. So that's great. We have a median of the margin at around 87.30. I don't think that's too much cause for concern. It's all about the entry on this one, though. All about the entry. Not the timing or anything like that, but it's just about that. Just about that entry, and that needs to be about there. I think this is going to be one of those, I would say, more rare instances where we have to wait for the market to come back down before it goes up. So I would say wait for the market to come back down to 87-ish, anywhere around there. And then once that's done, we can get the stop order in. So then we'll get the long from... I'm just thinking of that stop placement. If the target profit's going to be up here at around 87.60-ish, at a 1 to 2.5, the stop's going to be there at a 1 to 2.0, 86.963. That's not good enough for me. It doesn't make perfect sense, that one, actually. I'm gonna give that one a pass for the time being. Not very happy with the stop placement on it. It's got a good target, but I'm not very happy with the stop placement. I think we'll be too at risk there. So we're going to give that one a pass for the time being. Let's have a look at the NZD CAD. So we did take a hit on this one. This market came down here, 8 o'clock this morning. Took us out. It does look pretty good now, but we've missed the boat on it. It is currently trading at 80.92, and it has made a nice fresh high at 80.98. So we'll have to give that one a pass. That's all right. So we haven't got much dollar exposure anymore, considering we hit the targets on our dollar crosses yesterday. And what this means is we may be able to have the opportunity at trading cable, because cable looked pretty good yesterday, but I did not want to get overexposed in the USD. That's a nice area there. We've got another point there. We'll check out that for a trading margin in a moment. Hold tight. We've also got this low down here. When we drag that one across, it doesn't have too much of an impact. I suppose we do get the break close retest, don't we, just recently. That's not going to make for too much of a great trading margin, though, if I have that in there. No, but the one down below is very nice. That's decent. So we can't trade between these 2 points. I would say that we can't trade between these 2 points. So what we can do is we can eliminate this one in the middle, and we can have a red line there, just so we are clear with why we're not trading in there. So everywhere in here is the NML, okay, which is the no man's land. This is where we don't want to be trading, and this is historically where retail traders would lose most of their money. What we do like is the margin down here, which has a really, really nice path of least resistance. Okay, we like that. It's clear, it's clean, looks very good. And also, if we just copy and paste this and we bring this one up to around there, it also provides a very nice and adequate trading margin for us above this NML as well. So now we've created split opportunities on both sides of cable. So my proposed plan is to have a short order via pending order market order type. We're going to go for a 1 to 2.8 down below based on a 0.25% risk structure. So that's going to be a net return of 0.57, maybe 0.58. Quite nice. We've also got the long opportunity above price action here as well. So we're going to have, again, long order, pending order market type. We've got the entry. The stop loss is going to be about there. Entry at about maybe 134.52. Yeah, I'm going to put that about there. Target profit up at the top. It's not as juicy as the short, definitely, but it's still going to yield you a 1 to 2.55. So that's not going to be too bad either. So a 1 to 2.27 and a 1 to 2.81 based on 0.25% risk structures. So both of those opportunities very well rounded. We know why we're taking them. Path of least resistance is on side on both sides of the market here. We know why we're not trading, most importantly, in the middle, because we have TRFs, okay, which is a technical risk factor. Okay, that's situated right bang in the middle. And yeah, everything else looks pretty damn good. So cable is going to be a split opportunity, and we're going to add that to the book. So let's get it in. So we've got cable, pound against the dollar. We've got pending orders. We've got breaker structure, 0.25%, and we've got a long and a short. No, not 25%. Bloody hell. No. 2.5%. 0.25%. God. There we go. Nice. One long, one short. Excellent. And there we have it. Okay, so let's continue. Let me take a picture of that one as well. So pound yen was a good one yesterday. That was nice. In terms of where it's trading at this time, coming into a technical point here, just to triple check, I already have, but just to be absolutely sure, we do not have any major UK or Japanese yen data. We've got the BOT, bear with, sorry. So we've got no major data. Retail sales on Friday for the UK. Nothing today, nothing tomorrow. Japanese yen completely clear as well. So, as mentioned, nothing going on with either of these. We don't have any major macro events that are going to shift market sentiment, which is fantastic. We can rely more heavily upon the technical analysis in this particular instance. I think the trading margin between 199.59 and 199.80 is actually doable. We don't have any major TRFs at present, and the market is naturally going to be traversing its way back up to the 200 point. The reason being is because that is where the money is. That's the cash-rich area in the pound yen at the moment, where a lot of the commercial orders will be sitting, waiting to be filled, and the asset value will rise, so the orders can be triggered up here. So I think catching a few pips between these 2 points of its last leg to the cash-rich area above is not too much of a bad idea. I mean, we're going to see, obviously. I'm going to take it. This one's going to be a pending order, but the details for this one will want to be punched into your terminals ASAP. So if you are following me for educational purposes, then be sure to monitor. If you're following me for any other purposes, then please stick exactly to the rules and do as I do. Okay, and so we're looking at a target profit of 199.827, an entry of 199.593 with a stop loss at 199.487. We are looking at a 0.25% structure on this one. Okay, as always, and I will be a broken record forever on this fact. There is a reason that we use 0.25% with a very positive risk-reward structure. And that's because it's a bloody foolproof way never to lose your account in the market. So what we're going to do here is we're going to add that to the book, and I actually might add this to my broker first, to be fair, because it's bloody close. Yeah, I'm going to do that first, actually. So I'm going to punch this in the terminal now. Just bear with. Yeah. Okay. Right. That's that. I'm also going to punch it in on the book as well. So that's the pound against the yen via pending order, breaker structure entry, 0.25% for a long BOAS. I don't know what that is. BOS. Excellent. Right, we're continuing on. I'll tell you what I'll do as well, team. I will send that out now so that you can have that, and we'll move on. I've got £2 yen for some reason. I must have done that twice by accident. There we go. Right, let's move on then. So pound against the CAD. Break close retest back inside margin, looking really nice. Wow. So if we're shorting the Australian dollar versus the CAD up high, do we want to go long the pound against the CAD down here? One's buying Canadian dollar, one's selling Canadian dollar. What do you think? Based on what we've got currently active, based on what we've been working our way through so far, do you think it is a good idea to offset AC risk with GC risk? Or do you think that that is not a good idea? Give me an answer. Let's have a think. Okay, we've got to do and we've got to don't. Nadia is a yes. Asif is a yes. So we've got 3 yeses and a no. We've got a good group of people in the room at the moment. Any other answers? Does anybody else have any ideas? Sarah, you got any ideas? We've got Michael in the room as well. No pressure. No pressure, of course. Oh, God. No. The amount of people who end up driving in watching my sessions in here. Okay, that's fine, Sarah. You carry on. Carry on, please. I am late. Hello there, Matthew. Yeah, no problem at all, mate. No problem. Right, okay. Well, it's a no. It is a no. In fact, we will not be hedging the AC with the GC. And there is a reason why, and I'm going to give you the reason. The reason why is because we only have the AC. That is the reason. If we were going long the Canadian dollar in another asset, so let's say, for example, we decide to trade the Euro CAD. So we're going to short the Aussie CAD, and we're going to short the Euro CAD. Then, in that instance, I would then be deciding to go long the pound CAD to offset some of the risk in the other two. Because remember, okay, based on a 1 to 2, this is a very big generalization. I know we often get better than a 1 to 2, but based on the basic idea that we are consistently receiving a 1 to 2, double the reward for the risk, that's going to offset the risk of 2 positions. But if I only have risk in 1 position, then that's unnecessary. I'm at risk of losing 0.5% on those two, on the up and downs of those 2 positions, rather than winning on one and losing on the other 2, or vice versa, or whatever. So that's why we wouldn't do that. Now, generally speaking, actually, not even generally speaking, I would say almost all the time, when we're looking at hedging and we're looking at offsetting the risk, it's because we have exposed ourselves in 2 to 3 positions in the same currency. And then I will usually look for a and then I would usually look for a hedge to offset some of the risk that we've got in market in that one particular instrument. So having the GC, where it's trading at the moment, you see where the GC is trading? Well, let's face it. If this is our trading margin that's available, and we are looking at, say, this area here, which I would probably have as my entry. I mean, it's a pretty decent breaker structure point, right? The market is almost about to access that trade. So let's say, for hypothetically speaking, I've got my entry there. I've got my target profit. I've got a nice stop loss. Let's say, I want to go for a 1 to 2.5, 1 to 2.6. Let's say a 1 to 2.6 part there. That trade's going to be activated. But at the end of the day, the Aussie CAD is not going to be activated for bloody ages. Yeah, we're still trading inside liquidity. We're trading above a breaker structure point. We've got 1 and 2 to close underneath. So the timing's all out as well. So we have to take that into consideration, because by the time the pound CAD is in the market, I mean, we're going to be in that one any second. The AC is still up here. We could definitely get a rejection of this level. By that time, we're already going to be 0.25% down, which is then going to take away from the nice risk reward that we have available in the Aussie CAD. So this is obviously the reason why in this particular context I would not be looking to offset that risk. Is that clear? Does that make sense to everyone who thought otherwise? Okay, cool. Okay, great. Right, so GC looks like a good trade. I am more of a fan of the AC at the moment on this one. So going to hold 5. The AC gets the nice big breakout. We get the break close retest. Then we can reevaluate. We can potentially look at a long in the AC, but there's no reason to right now at this stage. So let's move on then. So we had GA yesterday. GA was a stop out. We got taken out of that on the market rollover, unfortunately. It's not looking any better. So it's actually looking really choppy at the moment. We're going to give that one a pass. Euro USD. Frankly, guys, that's actually not looking very good either. We were looking at potentially shorting this yesterday. I didn't like it because of the 2 lows that we had down here. Luckily, well, not lucky. So it was the right call to make. So I'm not interested in the Euro USD either. Have the Euro NZD, which looks like a complete and utter grind fest at the moment. So not feeling that one either. Euro Yen. Nice trending markets, pretty stable. Let's have a look at the daily, get some context. Okay, good job that we did. Daily holds all of the context. Big daily ceiling, big daily ceiling up here at the moment. So you don't want to go in against that one. It was looking nice long at first, but actually we're trading inside daily liquidity. Once we break out of daily liquidity here, we've got this high there as well directly in the way. So we're not going to be able to take longs for, I would say, another couple of days yet, maybe 24 to 48 hours away from being able to take longs. So there's a lot of noise in the chart, probably be on the side more of taking shorts in the Euro Yen at this stage. We go back down to the 15. We've certainly got some work to do as well before we take shorts. The breaker structure for the short is at about 172.50. We're currently trading at 173.22, about 80 pips above. So that one needs to do some work before we can get interested on that. But I am going to list that as a purple to go back to. And we may be able to pick up on that one over the next couple of days for you guys. So, yeah, because that looks quite nice as a potential short back down to the daily floor, which is down there. That's actually a really nice setup, frankly. Yeah, that's actually a really nice setup. I mean, that's not too dissimilar to the AC. Yeah, so, I mean, that's not too bad. Let's have a look at the euro. No. Yeah, no. No. No, that's gone as well, isn't it? Yeah. That looks so much better than all the rest. Very strange. What about that Japanese yen at the moment? There's a lot of market shift going on with the risk. Risk sentiment's all over the place, I'd say, right now. It's a bit of a chaotic time. DXY is already coming back down on itself after yesterday's gains as well. Japanese yen will be ramping up as a result, maybe. Not yet, though. It'll be coming into play soon, but that would be good. I mean, shorting the euro against that. That does make good risk sense. Right. Don't mind me. I'm just working out things in my head. You can hear the cogs turning. I am happy taking a euro yen short, so I'm not actually going to wait. We're going to get the pending order in the market now and get ready for that one. I have a good feeling about the euro yen over the course of the next maybe few days. We may have to end up cancelling it on Friday, dependent on a few factors at the moment. Obviously, we don't know what the results of that are going to be yet, but I am happy taking this one. So I'm going to go for a 1 to 2.57. That is a decent stop above many of the retracement highs that we've had. Not all of them, but it is good. Entry at 172.430 and a target at 171.33. So I'm just going to go back and update the book on that one as well. So we've got euro, yen, pending order, break of structure, 0.25%. All right, 0.25%, and that's going to be a short. Now we have a long in the pound yen and a short in the euro yen, but that's just the nature of the trades that are available. We're not taking this with the specific intent to offset the risk. Okay, that's not it. I'm not considering this to be some, magical, mystical hedge. The fact is, the euro yen trade is doing incredibly well. This one's probably only got about 15 to 20 minutes left before we take away more than 0.5% in that one. And by the time that's done, the euro yen is going to be nowhere away from triggering. Okay, there is a specific reason why we are carrying out these steps. So that's looking really nice anyway. So I will download that one and get ready to send that out to you after the session. I don't know what the hell is going on with this. I don't know what's going on with that. That's fine. We'll just have to deal with that later. Right, okay. Let's continue then. Euro yen is good to go. So that's going to be a short. We've got so much short at the moment. It's been the running theme recently. Had more longs than shorts in trading volume for a long time, and now we seem to be shorting the market all over the damn place. Right, let's have a look at Australian dollar then. So we've got AC at the moment. We don't have any Aussie dollar. That was actually really nice as well from 2 o'clock yesterday. Damn. Yeah, that was a really nice long. Aussie NCD. Break close retest above the upper margin there. I missed the boat on that one, unfortunately. Australian dollar versus the Japanese yen. Don't want to take that anyway. We've got 2 yen pairs already. I won't be trading the Aussie Swiss at this time. And then we've got the AC. So that pretty much marks out the FX stuff. So that is it for the FX market there, team. We've got a lot going on, though. We've added the AC, cable, pound against the other cable trade, actually. Pound against the yen and the euro yen. So we've got a lot going on there. So now we're going to move into our metals and energies. Well, that's annoying. So gold never actually came back down to hit that 34.50 area. It's just kind of sprung and gone for it. We're currently trading at new all-time highs. The current candle we're on is a new all-time high with 35.53.74 at the moment. Looking really, really nice. There is not going to be any trading availability for me on gold at the moment. I need to see a better retracement. So I want to see the profit taking from the commercials. That will probably happen on Friday afternoon, Friday evening time, where we see gold come back down. And then on Monday morning, we can look to get back in on the gold longs. So we'll, stay tuned for that one. In terms of silver, these will be rallying anyway as a result. Yeah, that's what I mean. So silver's up at the moment. Platinum, platinum's got a bit of work to do anyway before I get interested in that one. So looks like we're going to give the metals a bit of a pass at the moment. So moving on to the energy markets. Natural gas absolutely soaring ahead. 3053 at the moment. Had a beautiful day. 4.74% growth. We've got a really, really amazing trading margin to get to work with very soon. This is going to be a long-term trade, and it is going to be fundamentally driven. The demand is coming back for natural gas. Certain weather cycles are imminent. We are breaching the winter months yet, but we are getting there. And we also have geopolitical situations which are heating up, which will, I think, cause an increase in the demand for natural gas as well after we've been in a slump for so long. If you look at the daily time frame, we can see evidence of commercial positioning building into the markets here. We've been trading in and around this daily level since here on the 4th of August. We're currently today on the 3rd of September, so it's been a month and we've been trading here, and now we're finally getting that breakaway. So I think trading between these 2 points is going to be really, really nice. We go down the 15-minute time frame here. That is the available margin there that we saw on the daily. So we're going to be placing in a long order. Now, natural gas, okay, FYI, can be an expensive asset to trade. I say can be. it is not for everyone. Brokers are very, very specific and tentative with their costs for trading natural gas. So don't blindly trade it. Please check the cost of trading it. The spreads may vary widely on this asset. But I'm particularly a real big fan of natural gas, and my cost to trade it are really, really good. So that's, yeah, I include it for that reason. So natural gas, looking at I'm gonna say a 1 to 3 on that one, fixed. 1 to 3, static trade, no management requirement on that. So that's looking pretty decent. I have actually got the NG stop order, so I'm just going to update the stop to a pending long, pending order for a breaker structure, 0.25% long. Yeah, that's great. So yeah, that's done. Okay, nice. So that's what we're going to do with NG. Going to download that one. Okay, well, we are at 6 minutes past 2. Time is absolutely flown. We've got a hell of a lot going on in the order books at the moment, and now we're going to breach the US indices for this afternoon's market open. Now, just a heads up, for those of you who do not trade these every day with me, we are looking at market order types at market, not pending, not limit, and we are looking at 0.25% risk across the board as always. It's just the order types that change. Now, in terms of the available margins, I mean, the available margins probably aren't that much changed from yesterday. Yesterday's Dow Jones was over there at 1 to 2.31. Very modest little return, but nice nevertheless. We're currently trading at 42.21 there at the moment, heading back to that 45.24, I would say, level. It would be nice to consider the short below that, back down to the lows. Yesterday's calls for the market were long. That was a good call, but it didn't come without its mixed volatility. We did get mixed volatility beforehand, so I think looking at something along the lines of this would be decent for the short, and that's on the proviso that the market opens when the market is trading at about this level here. Then we can look at the sort of sell-off as a result of that. You will need to follow the break of structure rules. If you do not know what that is, on a 1 minute time frame, let me give you a real explicit view. Okay, a break of structure would be, for example, the market breaking out through this level in here. Okay, that to me is a structural point. It's not a great one, but it is one. If we drag that back in time, need to check its validity. We can see that actually the markets use this as a bit of a floor. We've got multiple retests before it continues down. If we take it even further back, we can see the market has had quite the price action pullback as a result, followed up with the break close and the retest of this level before continuing on. What this tells us is there is detail here, and it's detail via commercial institutions. Money's being added, money's being taken away, and there are orders being tracked at this level, and that's where the magic is in being able to ascertain where the money is in the markets. It's not the primary point of liquidity, it's not the primary point of inflection. It hasn't created these huge sweeping moves after variations in the price, in the asset value. We haven't gone down, we haven't then gone up as a result. But it's these little areas that really matter when we're trying to ascertain where is best to enter, because if the market does break through one, we continue trading up. If the market breaks below it, we do indeed continue trading down. And that's the kind of thing that we want to see. So at this time, we've got the breakdown here. If we come back up, we hit liquidity. This is a necessary part of the process. We do want to see that money area be hit. And then we can look at the breakdown of that, through this level, and bombs away. We can get stuck in. So that's going to be a 1 to 2.68 there in the US 30 Dow. The long, I'm actually really happy with it on the Dow as well today. So I'm going to have this level in here as my breaker structure point. I'm going to have the level above there as my target profit area. I'm going to have this as the potential long. So targeting this level in here. Entry just a little margin above the breaker structure. And the stop loss is going to be about there. So that's going to yield a really nice 1 to 2.76, and the Dow's looking great at the moment for this. So that's a really nice setup. So I'm going to download that. Just bear with. Yeah, it's fine. Yeah, so that's what I'm looking at for that one. Now, I'm going to put that in. So that's US 30. I don't know what's going on with this. Is that pending order via breaker structure 0.25%, and that's for a long. And then we've got the other one on the other side of the market for the short. There we go. Excellent. And so 2 Dows and tech stocks. Okay, let's go back to the 15. Let's get a look, get some context. So the NAS 100 is not trading yesterday's trading margins, but I could probably still recycle the available margins here. So like this area, for example, it just needs a tiny little sort of, little bit of manipulation there. So we're just going to drag that up. We have the nice sweeping move away. We have the retest, the multiple retest, which is looking really good. It's going to be probably a more sizable long for the NAS 100, looking at, drawing upon what's previously happened here between these two margins. The access point for the long today is going to be here. That's going to be the breaker structure point you guys want to go for. And the target profit is going to be up at the high. So it's going to be sizable. I mean, this is probably borderlining more of an intraday style trade, I suppose. But it's got very, very nice parameters. Okay, you're looking at around a 1 to 3 on that NAS 100. So that's looking really good. I'm not really that interested in the short, to be honest. So I'm only going to list along on the NAS. And that's going in now. NAS 100. These are all market orders. Just forgot. So market orders, breaker structure, 0.25. And that's a long. Okay, there we go. Right. And then, of course, we've got the S&P 500. To be honest, I'm not entirely sure it's prudent to include the S&P at the same time. I tell you what, we had a long in the NAS, didn't we? We had a long in the NAS. We can have a short in the S&P, can't we? That makes sense because we've got this really nice margin there. That's a great point for a target profit. And we've actually got such a nice breaker structure point in there as well for a 1 minute trade. It just makes sense. So we're going to have that in there. That's the breaker structure point for the short. We've got the target profit down there as well. Let's go down to the 1 minute time frame. Short below this area, targeting this area with your stop losses at about the 50% point between those two zones for a 1 to 2.4. Actually, no, that's going to be way better than a 1 to 2.4. Way better. Yeah, 1 to 2.6, 1 to 2.5. That's going to be the trade for the S&P. So I'm going to download that one. So we've got the S&P 500 market order type via breaker structure, 0.25% risk, and that's going to be a short. Okay, ladies and gents, wow. We're currently at 2:15. You guys have literally got 15 minutes to go before the bell rings this afternoon. And you've got a ton of stuff to get on with. So just to conclude and recap on what we've done, we've managed to source positions in the AC, GU, GJ, EJ, dual in the US 30, NAS 100, and the S&P 500. We've got loads going on this afternoon. Hopefully we're going to continue with that wind in our sails that we've had from yesterday. We did get a really nice book yesterday, as I said. I think we got well over 1.5% net return, and that was my first day back trading in, like I say, in the last 10 days. So that was really nice to come home to. And today, I'm looking forward to it as well. I think this is going to be good. Please don't forget, the risk is 0.25%. We do not risk anything more in this instance. That is the maximum risk exposure per position. And via all of the 1 to 2.5s and the 1 to 3s that we've got logged in, even you could lose 60, 70, you could lose 80% of those trades and still break even. Okay, so there's no problem with that whatsoever. Don't sweat the losses. So have a great afternoon, everybody. Have a fantastic trading session. I hope it all goes well. If you've got any questions or anything at all, please fire them out into the general chat and I will be happy to get back to you ASAP. I'm not going to take questions on the live event. That's only because I need to punch the numbers in on everything myself and get ready myself. So questions, please fire them into general chat. Get back to you ASAP, and I look forward to catching you in the next one. Also, FYI, next week we're going to be doing a big workshop, so make sure you log that in and stay tuned. So I'll see you then. Take care, guys, and trade safe. I'll catch you in the next one. Bye-bye.